Time once again to check on the latest earnings trends with Zacks Director of Equity Research, Dirk Van Dyke. Dirk, second quarter earnings are going to start rolling in here in just a few weeks. As we sit now getting ready to end the second quarter on June 30th, what do you think pre-announcements are going to look like?
In recent quarters, the companies have really been clamming up on the pre-announcements.
Yeah.
So probably fewer than we got used to a couple of years ago. But I would imagine more of the pre-announcements will be negative than positive. That's sort of like, the way companies do it. They figure if it's bad news, they better get it out. If it's good news,
right.
We'll surprise everybody when we actually announce.
So even though estimates have risen lately from the nadir,
yeah.
so to speak, it's curious to me, well, not really curious, but concerning to me, that the earnings outlook overall still hasn't really improved much.
Yeah, I mean, you got to keep in mind that, yes, we've now got about, for both this year and next year, 5 estimate increases for every 4 cuts. Mm-hmm. Actually, for next year, it's more like 4 increases for 3 cuts. But it's happening at a seasonal point where we've got very few actual estimate changes. It's sort of like the market going up on really low volume. So it'll be very interesting to see when the estimate changes really start flowing through in response to the second quarter earnings, whether this uptick that we've seen is continued then. But yeah, I mean, you've seen a little bit of stabilization. We were just looking at the bottom-up estimate for the S&P 500, going down relentlessly. It's now ticked up a little bit, but it's more where I'd call it stabilizing than really starting to ramp up.
Still surprises, though, expected to be more to the downside as companies have weak pricing power.
Well, relative to the sort of 3-to-1 positive surprises to negative surprises that we had grown accustomed to, yeah, probably, but there still is a strong propensity for companies to sort of underpromise and then try and out-deliver. Mm-hmm. So, they are right now spinning the analysts trying to lowball everything so they can come in and say, hey, look, folks, we did better than we thought we would.
Top-line growth becoming critical here. We have to start seeing some top-line growth, don't we?
Yeah, I mean, there is a limit to how much you can cut your way to prosperity. Now, an individual company can do that, but if it means more layoffs, that means ultimately less end demand throughout the economy that doesn't help things. Third
quarter, really the most critical here? Is that going to be the turning point?
Yeah, it's still expected to be down about, on a year-over-year basis, about 22-23%. Big improvement over the minus 36% expected for the second quarter. I think the fourth quarter is the place where we have a shot at turning positive on a year-over-year basis, mostly due to just how horrendous the earnings were in the fourth quarter of last year.
And 2010, looking a little further out, less challenging as far as the earnings profile?
Again, you've got really easy comparisons. We're looking for about up 23%, up 24% for the year on a total net income basis. That's still well below where it was in 2008 or 2007 and 2007 for that matter. Mm-hmm. And so on a relative basis, yeah, it's better going up than down, but let's not get too exuberant here. You're still looking at a general downtrend over years in terms of earnings performance.
Okay. If you want to go and look at all of the most recent numbers that Dirk has put together for you in his earnings trends piece, get over to Zacks.com's homepage and go down that homepage until you get to Dirk's picture. Click on the headline right next to it. It'll take you right to all of those numbers and you can fill in all of the blanks. With Dirk Van Dyke, I'm Terry Ruffalo.